What's up, everybody? Let me know if you can hear me. See my screen. Got ya, tight. Thanks, Mike. All right, we're gonna get going here. We're gonna start out with the SPX 0DT. Obviously, we have the gap down this morning with the news, but largely structure overall is still bullish. We'll get into the more full time frame here in a second, but just hitting on 0DT really fast. Have implied open right now at 59.95. Let's just check to make sure that is still current. Yeah, so 59. Yeah, I mean, we're really just been oscillating the last hour between 6,000 and 59.85, it looks like. So yeah, it's still accurate. Drunken Taylor zone 6,000 up to 5650. So that's kind of the key zone per se today, the key transition zone 6,000. Since we're going to be opening below that, that's going to be kind of the key fulcrum that we're going to look at. Below 6,000, right, we have key levels downside 59.75 at 59.50, right, due to the influence of the short strikes. We wrote about that a bit more in the pre-market prep in the Discord, so feel free to give that a detailed read. Paul goes into kind of the dynamics of the short strikes and why that may create magnetic forces down there. But anyways, above 6,000, and obviously we know that is more of a choppier zone, so we need to be very tactical within that area. First level above 6,000 is 60-30, just given the distribution of speculation in the 0DT structure today. That's a significant strike. Then above 60-30, that's where we start to flirt with getting outside of the transition zone, with 60-50 being the top side of that. But again, given the downside move, it's going to be key to understand what intraday volume is doing, what the market trend model is doing, to see if we actually have, speculators transacting above that level, helping to propel us higher. Other things in the 0DT structure, not a ton else to say. Overall, it is still a net call dominated structure. So yeah, not a ton else to say there. If you guys have other questions, feel free to put them in the chat. But again, Drunken Sailor zone, that's going to be the key kind of zones of reference for myself today. And just so you can see what that looks like on the chart. I have that indicator right here, right? 6,000, that's going to be a key level to the downside. Top 60-50, and then we have our key DEX transition zone in between that, right? So we know that it's going to be a choppy area within this zone, just like we saw yesterday, just like we saw the day before that. Watch those post-market recaps if you are not familiar with kind of the price action of what we expect within there. So if anything on 0DT is not clear, let me know. Just quickly moving on to the overall broader structure itself. First off, hitting on the market, right? This is not 0DT now. Now we're zooming out, thinking more globally, kind of a swing trading time frame, right? Multi-day, multi-week. Market trend model, longer term, we are still constructed to the upside. Just stepping back for a second, market trend model built off the tick index, understanding buying and selling occurring in the market under the hood. Right, so I don't think I can annotate this, or I don't know how to, but longer term, rainbow ribbon, that's what that measures, constructive uptrend. In the short term, we've kind of been, just chopping back and forth with our shorter term moving average ribbon, cumulative tick itself. Not a ton of filter take buying the last 3 sessions. So what's going to be key today is understanding on kind of an intraday time frame. Are we able to get above the 6,000 level? If we are we seeing an expansion higher via the intraday cumulative tick and some filter take buying? That would be very positive to see. Ideally, our intraday volume analysis is also supportive of the upside move. Or to the downside, if we reject, stay under 6,000, do we see a flush? And is that supportive with filter tick selling? That would be pretty indicative as well that, hey, people are putting, money behind this move lower. And just if you're not familiar with our intraday volume analysis, again, we hit on that every night in our post-market videos, so you can give that a look. But right here, we're just understanding what is specifically happening in SPX 0DTE options, because again, a significant amount of speculation is occurring in that specific complex on a day-to-day action, and that is what is having a big influence on driving price action itself. So like yesterday, right, very flat call side, not a ton of expansion, call move higher, which makes sense, right? That's why we didn't see price action really move higher, because the characteristics of volume just did not support that. And same thing measuring the puts as well. So today, if we see kind of a waterfall lower, we should see that supportive with material transactions of puts moving lower too. Same things with calls. And if we don't see that, then that should, kind of give us cautions about shorting in the hole and vice versa to the upside. But again, just understanding kind of the context of our simple levels and just a, market trend model intraday volume analysis is really going to be key. But going back to the full complex real quick. Yeah, starting off SPXA, again, this is just the full monthly, quarterly expirations. Well, this is actually just the 620 expiration actually, but this is call dominated, above the spot price. So again, when we said earlier broadly, the market is still call dominated, that is what we mean. Let me go to, and then again, this is just the SPX with all expirations turned on, same picture right there. And there, just going through our other tools as we always do in our pre-market prep, the true zeros, trending higher, spot price above, the constructive to see. If we start, it does start to trend lower. Spot price starts to trend below those as well. That would be more concerning. That would start to say that, hey, the cruise ship that is the SPXA is starting to turn. But again, structure takes multiple days to change. It's not just going to change all of a sudden. GEX ratio, still constructive. Looking at delta balance, right? This is just simply projecting it because options are inherently forward-looking, right? So this is just us looking through the microscope at what the next 5 expirations out in time are telling us, and these are fairly bullish. What other things to say? Not a ton to say there. This is SPXP. Again, there's the SPXA complex. SPX also has SPXP, which is your shorter term, to your 0DT, your dailies, your weeklies reside, all that good stuff. This is still call dominated, above and below spot price. Not a ton else to say here. We can see the DEX transition zone is quite wide, 60-40, 69-45. So 60-40 roughly lines up with our 0DT transition levels, which was 60-30 to 60-40 as well. So again, 60-40 kind of a key upside reference level. We know with 0DT that this area within here is choppy as well. So this is just kind of confluence there, but just on kind of a more holistic, broader time frame. Going through our true zeros, again, same picture, true zeros, broadly trending higher, spot price above that. So again, if we were to see these start to trend lower, you can go back and you can zoom, see what February, see what March, see what early April looks like when the market was not as constructive as it is now. See what that signature looks like. That is not what we have today. So again, when we let off saying, yes, we have a gap down today, but broadly the market is still bullish from a multi-day to multi-week time frame. That is what we mean. Looking at the GEX ratio, this is kind of the one warning flag that I did see in the pre-market prep today, aside from being under the transition to 0DT, just because we can see price continuing to make new local highs on the recent rally higher. But the GEX ratio itself is pretty choppy. It's actually moving lower, so that's kind of a divergence between what spot price is doing and what speculation under the hood is doing. Yes, we're still call dominated, but day over day, it got less so call dominated. So that is just something to keep an eye out. That doesn't mean, abandon all longs, go completely short or anything like that, but that's just something to understand is the market on a relative basis has weakened, or as Paul said, it's weakening, but it is not weak. So keep that in mind. All the other tools are still bullish. Again, market trend model still bullish. If we start to see a linear down day as an example, then that would be something that would be more concerning. That's kind of the first thing in our market turning framework that terms is the actual intraday price action would trend lower, railroad tracks lower, and then from there, then we start to see the structure start to deteriorate. So that's kind of the progression of that. Not saying that's happening yet, but we need to be well aware of when that does happen. Other things to note, delta balance still looks fairly constructive there. So yeah, that's really the pre-market prep. Just going back to 0DT structure, again, key transition zones laid out for you, kind of what we're looking for. What I'm looking for really is how we interact around that 6,000 level to start the session. Then if we do get above that 6,000 level, is our intraday volume analysis, is that market trend model supportive of that continued push higher? So now I've been watching the live stream. If you guys got any questions, let me know. If not, we can see you guys in the Discord in a little bit too at the open. Yeah, we just have the S&P futures up here right now. Had a very nice recovery right at the 50% retracement between the highs of yesterday and the lows of the overnight session. So this 50%, this is kind of just a key reference point I like to use on, when we have large moves. It's just kind of a good fulcrum as well. Roughly lines up with 6,002. So this is another key level I'm going to be watching this morning as well. Yeah, awesome. So guys, that's all the prepared remarks I had. If you guys had specific questions, I think just put them in the chat. I'll stay on for a couple minutes. If I don't see any, then we'll get off and we'll see you guys in the Discord. Something to just highlight for you guys too, GameEdge.us/education. So we have our blog here. We have roughly 15 articles that we read a weekend education newsletter, just going through our tools, going through our frameworks, all that good stuff. Basically everything we put out, our entire methodology is free more or less. So if anything was confusing that I talked about today and you're not a member, you can go look at all this stuff. Market trend model is an example, SPXA, SPXP, intraday volume analysis, our market trending framework, which I hinted at today. You can go read all about that. We have videos for you guys as well too. So it's not really theoretical either. It's mostly just full of actionable examples. So you guys can implement this stuff. Theoretically, if you read it right now at the open, you should be prepared to implement that stuff. So we have that. We have multiple free courses. The GameEdge framework, again, that's just our full entire methodology that we just walked through. Obviously, a lot more detail. We have, just a trading psychology course, a basic options, school of options course. So, a ton of, and then newsletter, daily newsletter, which obviously we have the YouTube live today, so that's going to take the place of the daily newsletter. Then we have our pre-market prep newsletters, our weekend newsletter as well. TT, can we show SPX chart? Yeah, so this is the SPX chart I think you're getting at, or maybe you're looking at our dashboard right here. These are just the key levels that then inform the levels of reference that we are looking at intraday. So we're slated to open right here below the 6,000, which bottom of our drunk sailor zone. In terms of other indicators, I just use basic, I reference the opening print for the session, I reference prior day close, and then VWAP, and that's really it. Those are just key levels of reference I often see price interact with on an intraday basis. But again, my strategy personally really just revolves around those key levels that we just have gone through, because they often are confluence with the other market generated levels. And then the market trend model, which is not an indicator per se, and then our intraday volume analysis, right, which is the most important thing I reference on an intraday basis. Even if you don't have key levels, if you're just understanding how the market is actually transacting in terms of chop versus trending higher versus trending lower, from there you can find good risk reward entries. But obviously then having simple levels on top of that to further refine your risk management is key. How do you confirm a break of key level? Well, the way you confirm a break of key level is price breaking the level and holding the level. There's no other way to confirm that. But that comes around to trading, and you take high probability bets that when you're interacting with that level, say you're going to the upside, 6,000, if we break above that level and hold and we see all of our metrics pointing higher, then that's a confirmed break of the level. If you're wanting a crystal ball, you can't get that. You just have to take the high probability bets based off of what the market is doing. Yeah, that comes, again, TT, that comes back to your personal trading preference. If you want to wait for candles to close or if you don't. So, me personally, I wait for a signal candle, which is a fully closed candle, and then if we break above it and I'm bullish as an example, then that's my entry with a stop below the prior below the prior close candle. So, like as an example, going back to yesterday, this is a trade that I took right in this area, right? We had this, 10-minute consolidation. These were my signal bars up here. Again, because we were interacting with the prior day close, and 60-20 was a key level yesterday. I forget, one of the transition zones was right there. So that's key level of confluence. Found support at the open, continuing to push higher. VWAP was higher. So right, my entry was a break above that candle with a stop below. Just very simple. If you know who Al Brooks is, Bar by Bar, good book. Kind of what my intraday, in terms of entries and exits, is based off of, but it's all predicated around those key levels and understanding just positioning within the SPX options market. Well, yeah, Tom, like SPX and SPY are different vehicles, right? Like they're not going to mirror each other. As an example, there could be more speculation occurring in SPX and more hedging as an example in SPY. We've seen that before. So if you're expecting strikes to match one for one in terms of positioning, then that's not going to happen. I tend to defer to SPX just given the size and how much speculation is occurring there. I candidly don't really reference SPY and as part of my intraday trading strategy. It's not wrong, that's not right, that's just what I personally do. But I know we have folks in the community who like to reference SPY, QQQ, all that good stuff, and there's certainly information in that because there's material speculation occurring there. I just, can only process so much information at one time, and I know what works for me, and doing this for 5+ years now, I personally just like looking at SPX. Yeah, no problem, TT. Any other questions, let me know. Do I have it extended? Yeah, just going through. We can go through the. I'm just going through the Mag 7 real quick. Let me turn on extended hours. It's kind of annoying you can't do it faster than this. These were yesterday pre-market levels. I haven't put on the script for today yet. I can do that though. Let me see if it's produced. So yeah, we have scripts in our Discord for TradingView and for Thinkorswim. So if you're users of that, here you just create a simple indicator. We're just gonna remove it and replace it with how did I do the wrong script today? Control C, Control A. There, that looks better. I copy and pasted the wrong thing in there. All right, then it automatically updates, right? So just looking at these key levels, seeing if anything looks interesting today. Yeah, so again, we know P-Trans is a significant level. So Apple opening right at P-Trans, it's found support in the pre-market around 0 gex, trading up to P-Trans. So if you're interested in Apple to the long side, A, we want to see the overall market be constructive, but B, 2000 can be your key level of reference. Tesla to the long side, not interesting. It's below all the key upside levels. NVIDIA, 143 P-Trans going to be that key level of reference there for you. Palantir in between P-Trans and plus gex, nothing to do there in terms of an entry. Meta, 60, 80, 250, that's going to be your key kind of downside. Remember, 0 gex is more of an aggressive entry than P-Trans, but it's going to be your best risk reward to the upside is if 0 gex does hold. The play there is to up to P-Trans and up to plus gex ultimately. Amazon right around P-Trans at 210, and then Google between 0 gex and P-Trans, so really nothing to do there. In the end, just looking at this on it. Yeah, I'm just looking at it. yeah, I mean, Nvidia has had a nice kind of daily consolidation. See if we can get another next move higher. I mean, that's easy place to gauge your risk. Yeah, no problem, Tom. No problem. TT, if you guys got other questions, let me know. So yeah, I mean, end of the day, stocks are showing, or at least I really just focus on the most highly liquid stocks, right? Again, only so much brain capacity. Want to keep it simple. So yeah, I mean, there's multiple stocks where, you know, if the market does hold here and decide to move higher, you can get these right at their key transition zones, and good place to size your risk against. Again, ES right at the kind of 50% retracement level, so that's gonna be a good level of reference today. And so yeah, with that, I'm gonna end it. Appreciate the time, guys, and we'll see you in the Discord. Thanks. Bye.